Hey everyone, it's Blair here at Time Trades. Thanks for joining me this weekend. This is your weekly video for Sunday, December 11th. Okay, so we had a great week last week. The forecast that you see here as the yellow path turned out to be very accurate. I think in hindsight-based self-assessment, it's probably worth an A because I captured most of the moves here very well, including the down move on the PPI release day, Friday. And that accelerated into the close, and we ended up closing below the magic level here at 11,704 on the NASDAQ futures. So I think that sets us up really well for a continuation of this forecast. I am not going to be changing this forecast for that reason. It's off to a good start here, and the forecast looking ahead for the next 2 weeks or so continues to be valid. The logic behind that continues to be valid. We are looking for a lot of the moon lunar cycles to continue to move down here. The Gann wave, which is the yellow line up here and the blue line here, indicate down. The lunar sign cycle from Leo to Aquarius indicates down, and I'll show another few cycles based on Mercury and Venus that also indicate down through roughly the third week in December. Okay, but that's when we're going to be alert for a pivot, because there are some longer cycles based on Mars that indicate up through January. All right, so we're not over rotating bearish here. I know it's easy to do. There's lots of dramatic tweets and stuff on social media, but we are looking for a very nice setup into a long move into the new year, where we get the Santa rally starting in the third week of December. All right, so that is kind of an overview of what we're seeing. So we're going to leave things as is here. Coming up this week, we've got a CPI release on Tuesday morning at 8:30 a.m. And then the FOMC meeting concludes on Wednesday, and the results of that will be released at 2 p.m. So we're going to be watching those very closely, and I've added actually a new technique into the Time Trades TradingView script. So we're going to drop down into a shorter time frame here. I released this just yesterday. So this is a brand new feature to the Time Trades TradingView script, and it's based on Vedic astrology. That is a branch of astrology that was created in India and has some very powerful predictive capabilities, and this is now part of the Time Trade script here. I do want to call out one of the experts on Twitter. Finastro Trader has long been promoting the use of these, and they're very effective. So if you want to go deeper into the world of Vedic financial astrology, I would encourage you to check him out and check out his website. I'll leave links in the comments to the video so you can check that out. All right, so here we are with the new Time Trade script. I did record an in-depth tutorial on this yesterday, so that is up on YouTube. But if so, I'm not going to go into detail on the changes here. The major change is this new option here called Vedic intraday periods. All right, so that only appears when you're using an intraday period, and you can see it creates these labels that are based on Vedic timeframes. Okay, now these are very fine-grained labels. They actually work best on single-digit minute charts, like under 10-minute charts. But we're going to use these to take a look at what is happening during these news releases coming up. So we've got the CPI over here dropping at 8:30 a.m. on Tuesday. And one comment I'll make about these labels is very important not to just blindly trade based on these Vedic intraday labels. You do need to get a price confirmation in order to trade these. So it's not just, oh, look, here's a bear period I'm going to short, or here's a bull period I'm going to go long. You need to combine this with a price filter, with price-based confirmation in order to get the most from it. Okay, so the PPI news release was occurring during one of these bear periods up here. And it was for this reason. In last week's video, I forecast a move down, and that's actually what we got. But then, as you can see, price recovered quite strongly, and then the bull period started, and instead of continuing to move up, it actually moved down. So like anything in the world of financial astrology, these things are never perfect. They never will be. So very important that you just integrate this information into the analysis that you're already doing, and hopefully it can give you an edge. All right, so with that caveat out of the way, let's take a look at CPI and when that's coming here. So the CPI is dropping 8:30 a.m. on Tuesday, and this is happening during a Jupiter exaltation phase, which is a potential high of the day. Okay, so be aware of that. And coming up after that, we've got a bear phase here. Saturn is in its enemy phase relative to the moon at 11:30 a.m. on Eastern time. So one of the things I'll point out on these labels is the labels are now showing the exact time, but they're showing it in exchange time, and the exchange for the NASDAQ futures is in Chicago, which is Central Time. So we're seeing a label that shows the Central Time of 10:36, whereas the time axis is configured to show Eastern Time, which is 11:30. I can bring these into alignment simply by changing the time zone here. All right, so we're going to change the time zone, and now everything is matching up. All right, so we've got CPI, so that's happening during a potential high of the day. So there's no bull or bear period associated with this, so it's somewhat neutral, I guess, from an interpretation standpoint. I would bias to slightly bearish because this could indicate a high and then a move down. So we'll just leave it at that. The FOMC meeting, however, on Wednesday is happening during a bear period that starts at 9:30 a.m. on Wednesday morning Eastern time. So that's the bear period here for Saturn enemy. 9:30 a.m. is Central Time, not Eastern Time. So that would be 10:30 a.m. Eastern Time. So the 2 p.m. news release is happening during that bear period, and that's showing here as 1 p.m. on Central Time. So we need to be aware of that. This would give me a bearish bias heading into the FOMC. And as we zoom out to a daily chart, that's why I continue to say that this forecast is valid. Okay, so that's a quick review of the new features in the Time Trades TradingView script. Again, I'd encourage you, if you want to go deeper into the world of Vedic astrology, there are much better experts out there that can share their knowledge of the nuances and how to best trade based on those. Okay, so with that out of the way, let's go and take a look at our view of stocks here. Actually, I'm going to do an quick update to the roadmap. All right, so we still have this mass pressure index here on the roadmap. This is important because this is going to help with longer term forecasts. And now that we have this very short term Vedic intraday index released, my focus is going to shift to that because I want to balance out the timing signals for short-term intraday traders with the timing signals for longer-term investors. So the mass pressure index is going to be very, very valuable for longer-term investors. And that's going to be the focus. So we delivered after a multi-week beta period, the fine-grained intraday trading signals. So that was based on Vedic astrology, and that was delivered yesterday. We continue to focus on some usability improvements, and the TradingView script label locations have been refined to make it easier to use and just easier to read, so you don't have to scroll the price axis all the time. A bit of attention to detail there to make the most use of the screen real estate. We still have dark mode support on the to-do list, as well as search on influencers and a number of other usability improvements here. We also dropped in the category of additional videos, we dropped an updated TradingView script tutorial video yesterday. So that pairs with the new functionality in the TradingView script. So that is available there. So the next real focus item here on the roadmap is going to be tools for longer term investors, perhaps even a weekly mass pressure index. I don't know about a weekly machine learning forecast, but I'm thinking right now to implement the mass pressure index using the weekly time frame instead of the daily time frame, but we'll see how that goes. Okay, so that's the roadmap update. Let's transition over to time trades here, and we can do a tour through what we're seeing in the world of machine learning based probabilities. Okay, so we've got the cues. Now, very little in the short term coming up here. We can see in our bottom window, December 19th is when we see that bottoming window. If we flip over to TradingView, you can see that here. This box that we drew last week starts Monday, December 19th, ends Tuesday, December 27th, and that is roughly the timing window when we expect to see a bottom in there somewhere, and that's based on lunar cycles. It's based on Mercury's motion as well, and after that we expect to see a move up. So let's see how well that's reflected in some of the machine learning probabilities here. We do see a pivot low December 19th. So this is roughly the area where we expect to see a low, and we start to see a few green bars here of upwards probability, and we also see that accelerating into February. Let's take a look at spiders. Okay, so on the spiders, we see a pivot high December 14th, so that could indicate a move down into a low the week of the 19th down here, but we don't see any red bars, we don't see any green bars, so it's very much you know, and I guess I would say a bearish / ambiguous forecast here. I really like to see combinations of pivots with moves down in the forecast just to give me a little bit more confidence, and then after our bottom window, we start to see moves down. So this could be either our forecast is completely wrong and we see a move down starting December 27th, or this cluster of red bars down inverts. I think it's going to invert, and I think we're going to see a move up into January just based on past Mercury cycles. Okay, so that's spiders. Let's take a look at the Dow. The Dow has been, of course, the strongest of all the indexes lately, and but we're starting to see it fade a little bit. It's sitting right on top of this magic level here at 335. If we cross and close below that, then that would be the first cross and close below a magic level since this probe down on November 3rd, which quickly got bought. But really, the first one that stayed below a magic level is back on September 16th. So something to be aware of here on the Dow is to watch this magic level really closely. Again, we've got a cluster of moves here. Again, it's somewhat ambiguous because we've got a cluster of moves up. So you would expect to see maybe a pivot high over here. Instead, we see a pivot low December 27th. So that's at the end of our bottoming time window. So this may end up inverting, and we may end up seeing a move down into this pivot low, and then vice versa. If our forecast is correct, then this should invert and indicate a move up. Okay, so that's the major indexes. Let's take a look at bonds. So the 20-year bond is showing a very green forecast. So I'm not sure what to do with this or how to interpret this. It's just, like green for months. I would suggest giving this a little bit of a grain of salt. I think the shorter term bond forecast is a little bit more useful. Let's take a look at IEF. With IEF, we see pivot low down here on the 19th and then moves up. Of course, if either of these bond forecasts come to play, we're looking at much lower interest rates in the near future. So we'll have to be aware of this and see what happens there with bonds. Of course, this would be hugely bullish if interest rates do come down the way this is indicating. But as I've shared already, I don't think the bullishness is going to start until really after December 27th. And then we'll see a move up into January at least. Let's take a look at the dollar. The dollar is also very critical in our analysis here. As we can see, it's been getting really pushed down quite aggressively as the forecast for lower interest rates builds. And we can see here we've got a little bit of a move up here, December 14th, up into this gap in the down pressure. So this could indicate a spot where the dollar moves up, and that would support our forecast for a pivot low during this window of time between the 19th and the 27th. And then afterwards, we see some probabilities of the dollar moving down. Okay, let's take a look at stocks and to see how this fits in with the rest of the forecast. We've got Apple here. Apple has some mid probability down days, like 39%, and that next week. I'd call this mildly supportive of our forecast of a low in this 19th to the 27th window. And then after that, we see increasing probabilities of a move up. We've got a pivot over here early January. So that could be a pivot high. It could also invert and be a pivot low. Right now, the forecast kind of fits together, right? But what's lacking, I guess, is a little bit of confidence in the moves. We see some low probability moves down. We see some low probability moves up. We see some mid probability pivots over here. Looking ahead in the future, though, we see some very high probability moves up over in April. Okay, that's Apple. Let's take a look at Google. Google is not super informative right now. So we're not getting a clear opinion on any of the four probabilities that are generated really until after this January 17th, and over here, January 9th, we start to get some reasonable, confident forecasts from the machine learning. So not much we can learn from Google's forecast. That's okay, it happens. Microsoft, kind of the same thing, just some low probability moves here until early January, and then we start to see some moves up. So again, we're going to have to use some other analysis methods in order to come up with a directional forecast for these. Okay, let's take a look at natural gas. I track this pretty regularly. It had a pretty impressive bounce down here after coming down below the magic level at about $18. And now it's popped right up. And it looks to me like we've got a bit of an inversion here. Typically, blues are lows, Gann wave blues are lows, and Gann wave yellows are highs. So, but our most recent yellow or most recent blue over here, November 28th, was near a high within 2 days of a high. And then down here, we've got December 12th, that's Monday, that's a Gann wave yellow, and that's within, 3 or 4 days of a low. So it looks like we've got a bit of an inversion here. I'm still really interested in a potential long trade starting the 13th or 14th, kind of based on these pivots here and ending the 27th, 28th. So what I like is the two pivots, the pivot low, the pivot high, and the declining probability of down days. That is looking encouraging for natural gas for a potential long trade, all subject to confirmation from price, of course. Okay, so that's UNG. Let's take a look at the world of crypto. We've got Bitcoin. So Bitcoin is stabilizing here after just being hit with horrendous bad news over the last few weeks with the FTX debacle. Stable is a pretty good thing right now for Bitcoin. We're not getting much out of the machine learning in terms of probabilities of moves here. We do have a few pivots. We have what looks like a pivot low here on December 15th. So there's potential for a long trade, but again, very dependent on analyzing the price action here, especially around these magic levels, because we know that there are strong support and resistance levels, and there's some very predictable price action. All that is documented in the user guide in Time Trades. So if you want to learn more about that, just come up and check out the user guide under the More menu in Time Trades. It's got a little catalog there of different price action movements you can expect to see around magic levels. That's Bitcoin. Let's look at Ethereum. Ethereum also pretty chill. It's really just digesting these last moves, taking its time, consolidating here below this magic level. We're getting a really clear cluster of bullish probabilities over here in early January. So it looks like the bias is going to be on the long side here once we get past this little cluster of down probabilities around December 18th. So I think closer to this Gann wave blue, once the negative part of the lunar cycle is out of the way, would be a good spot to start accumulating some Ethereum. All right, let's take a look at Litecoin. Litecoin's been one of the stronger coins here, and we can see it's still consolidating its gains right above the magic level. This is some very strong price action here. We can see it's respecting that 76 magic level really well. We've got a pivot high. We've got some probability, a small patch of moves down, of really low probability moves down, but then we see this nice cluster of green here. So again, a nice hold here in Litecoin. with potential to, add some more just before this, right around December 19th, 20th or so, to take advantage of this cluster of green. Okay, let's take a look at Indian indexes before we close the call. We're going to take a look at the Nifty 50 here. And in last week's call, we were talking about, taking profits, benefiting from this all-time high that was made back on December 1. That looks to have been the right call. We've got this cluster of down days here. And prices followed. So we're definitely making lower lows. We've got some probabilities, low probabilities, mind you, of a pivot low on the 13th and 14th. So that's Monday, Tuesday. Tuesday, Wednesday. So we should watch for that. And of course, there's the FOMC news coming up. So there may be, and the CPI data. So that will be a global catalyst for price affecting even the Indian markets. After that, we don't really have much in terms of forecast probabilities. We see a pivot high here, January 2nd. So that would indicate, I guess, a bullish bias coming out of December 14th, moving up into January, and also be supportive of our general forecast for the markets. Let's look at the Nifty Bank Index. That's been stronger than the Nifty 50. And we can see here how it's making a new high here right around the Gann wave yellow. But we do have a bit of a gap of up probabilities here. Gann wave yellows also tend to align with pivots. So we can see in the past how it's tagged some over here. It's identified a pivot high within a day, pivot high within a day, but it also identifies some pivot lows. Here's a pivot low within a day, pivot low dead on. So I'd be pretty conservative around the bank index on the NSE here, just because of where it is relative to the Gann wave yellow. Okay, so that's it for me for this week. I hope you enjoyed this video. Good luck this week. Trade safe, and we'll see you again next week. Bye now.